Well, hi everyone, and welcome to Buffett and Beyond Research Stock of the Week. And this week we're going over CrowdStrike Holdings. And folks, for this year, it's quadrupling the market. And let's get right on with it. And remember, folks, if you want to live on this beach like Jimmy Buffett used to and have lunch like he used to have right here, you've got to learn how to invest even better than Warren Buffett does now. Well, let's get into CrowdStrike because a lot of you have not heard of this stock. And they are, CrowdStrike Holdings provides a leading cloud-delivered solution for next-generation endpoint protection on its Falcon platform via SaaS, and that's software as a service model. And its products span security markets, including endpoint security, vulnerability management, and threat intelligence. So there's some pretty important things right there, the vulnerability management and threat intelligence. Now, the U.S. accounted for 70% of revenue in the fiscal year ended in 2024, and other large markets, Australia, Germany, India, and the UK, and has over 7,273 employees now. Now, one of the things that we look at is we look at the net income, which are the clean surplus earnings. In other words, you take net income, but you take away non-recurring items and future liabilities and some of those stock options that are issued to management. So you take all that out and then you come up with something called net income. But it's different than the accounting net income. This is clean surplus net income. But the point we want to bring out is that in 2024, it had a hiccup because it was losing money. This is a new company, by the way. All the way up to 2023, and then 20 started making money, and then 2024 it was supposed to be making money, it was projected to when we went over the stock a couple of years ago, and it lost money, lost 8 cents per share, but for this year projected to be $3.45, and for 2026 expected to be $4.45. Well, that brings that clean surplus ROE up very, very nicely, because anything over 20% is a candidate for our 30 stock growth portfolio. So our retention rate is 100%, which means all the money it's making is going back into itself in order to grow. Now, for one thing that we want to look at is the revenue growth, because I just want to go back here a little bit because new companies are hard to judge, because in the beginning they usually lose money and then they make some money, then they lose some money. So this is very typical of what we see out there, especially in the technology stocks. And folks, if we go over here to ETFs, what ETFs is this stock in? It's in the QQQs, which is the NASDAQ 100, and also the XLK, which is the technology ETF, or one of the technology ETFs. So one of the things that we look at very closely is the revenue growth. Now, the revenue growth for the average stock is around 7.1%. So we see this stock for 2025 and 2026 3 times the average stock out there. So as long as it has revenue growth and it keeps doing what it's doing, it's going to make money. At least that's the way that we're looking at it. So does it have a lot of debt when we go over here to years to pay debt? And the answer is no. And this is Buffett's rule of thumb. He says if a company takes all the money it's making, uses it to pay off debt, how many years will it take to pay off debt? Well, this company can do it in 7/10 of a year, which is somewhere around 7 or 8 months if it took all the money it was making to pay off that debt. So if interest rates do go higher, we don't worry about the paying off the debt because they're making plenty of money in order to do that. So now these numbers over here that you see where they went going up into the black and then all of a sudden falling back into the red a little bit and now projected to be $3.45 for 2025, and for 2026, $4.45 a share, and that brings that clean surplus up very, very nicely. So the key is now, okay, how does the market look at this stock and what it's doing? Because when we read what it was doing, it sounded pretty complicated. So when we're looking at the year-to-date, black line is the S&P 500. Now, year-to-date, we're looking at January, February, March, and April is just about over. We're looking at the S&P 500 going down about 8% right in here as of the day I'm recording this. and CrowdStrike is up just about 20%. So it's doing very, very more than quadrupling the market in this particular year, and that's what we like to see. Now, when we look at 1 year, so this is the trailing 12 months, again, black lines, the S&P 500, we can see where it was having some trouble, and the market did not like that, and of course it went down with some of the tech stocks, as you know, if a lot of you have tech stocks in your portfolios, you know how they were hurt in the beginning of this past 12 months. And then the stock came back, even with the S&P, went up a big group in here. Well, we had the last quarter results, and then it fell back down and then started to take off again. So it's been doing very nicely. So for 1 year, with the market up about 8%, trailing 12 months, this stock is up 40%. So yeah, we'll take that, folks. And then when we look at 5 years, yeah, you can see right in here where it was hurt with the tech stocks. And don't forget, this is 2025, 2024, 23, and 22. So the market was down in 2022, and the tech stocks came down further than the market. And then this stock then took off from the relative to the market. The market started going up. This stock took off relative to the market, and then as we had the past month of down market, this stock did very, very well indeed, didn't it? So we're looking at the past year here, and it's been up. Here's the beginning of the year, and now we are into the very end of April, while the market is still down quite a bit for this particular year. So yeah, it's been doing very good. It's very, very volatile, like a stock would be. But folks, look at this. This stock is up almost 500% over 5 years, with the market up about 80%. So yeah, doing very, very well. So folks, we've had a pretty tough 4 weeks, except for the past couple of days when the market seems to be gaining its footing. And we hope we have seen the bottom, and the political rhetoric out there has seemed to calm down a little bit, because it's all about tariffs, isn't it? So as long as it calms down, there's some deals on the table, and the market knows that China and the U.S. have to come together sooner or later and work out some deals on trade, on tariffs, and everything looks good, because it can't get any worse, folks. So it'll work itself out, and we're looking toward a good summer. So folks, remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So folks, go out this weekend, stay safe, stay well, be with your family, and we'll see you right back here in a couple of days.